congratulations on taking the first step and learning about the homeownership process. One of the things that creates challenges for first-time home buyers is not understanding the process and how it works. And then everybody gets a little bit frustrated as they take this journey into homeownership. When you have a team that's assembled, you have the realtor, lending, term, and insurance team, all critical components of making this work, that can make your journey a little easier as you go through this process. So with that, folks, we've got folks that joined in. We're a few minutes over, so let's go ahead and get started. Welcome to a 30-minute Homebuyer Blitz, where we talk about some of the opportunities that are out there in the marketplace and the most effective ways to go through this process. And you have a lot of resources here from the real estate side with Debbie, the insurance side with Jessica, and the lending side with Nick. And myself, actually, I just get to be the moderator of this. I really don't do anything. The other three that I mentioned actually help you through the process. So welcome aboard. We're going to get started here. Debbie, why don't you talk a little bit about the frequently asked questions that we get as we go through this process?
Sure. The most frequently asked question is why? Why should I buy a home instead of renting? You've probably gotten the advice most of your life, buy a home, buy a home, buy a home, but sometimes we don't understand why. So that's what we're going to cover tonight. Who should buy a home and who can help me? Well, everyone should buy a home as soon as they can. And our team is here to help you. Like Brent said, we have a lender, Nick, we have me, Debbie, the real estate agent, and we have Jessica, the insurance. That's the whole pieces of the puzzle there. What do I need to do first to buy a home? Well, you need to get pre-approved by Nick. You need to talk to me. We'll go over the process, but we're here to help you with that. Now, here are some of the fears people have. What if I have a low credit score? What if I filed for bankruptcy, foreclosure, or what if I have student loans? Please do not let any of those fears get in the way of you looking into becoming a homeowner, because all of these fears that people have can be addressed quite easily. And don't feel like you're alone, and don't be embarrassed, because everybody has had these problems. When is the best time to buy a home? Well, Brent said that now is a really, really good time to buy a home. And he's right, because sellers are giving buyers help. I had a seller this weekend give $10,000 to the buyer, which was 2.5% of the sales price. Where should I buy a home? The location of your home matters for some different loans, mainly the USDA loan, and Nick will go over that. How much home can I afford to buy, and how much down payment do I need? How much home you can afford to buy is a procedure that Nick will go over with you, and how much home are you comfortable with too. Remember that sometimes comfort is different than how much you can afford. How much down payment? You would be surprised. Sometimes you need little to no down payment, and Brent and Nick have all those programs and they can go over them with you.
Yeah, I think it's important to understand when we look at the best time to buy a home, and we shared this a little bit before we started, is interest rates are trending to a 4-month low. Property values have normalized, and there's opportunities out there, and sellers who weren't willing to participate in closing cost assistance are doing that today. In addition to that, grant funds are being refunded. So there's what do we say, Debbie? There's buckets of money available out to help people.
Buckets of money. Yep.
Absolutely.
Buckets of money.
And a lot of times that money gets used in the first part of the year and it's not available in the second part of the year. So timing is important when we look at this. I think Debbie made a really good point. It's not just what you can afford to buy, it's what you're comfortable with. That's an important part of it. And since we're valued in wanting to help our clients make the right decision, we're not just like you said, oh, you can qualify for the most and that's what you should get. What you want to do is focus on what you're comfortable with. I think that's very important. So the other question is, why should I buy a home instead of renting?
Well, the most important thing is because you want to establish generational wealth by building your net worth by owning a home. It's very, very difficult to build net worth if you're renting. In fact, it's almost impossible. So to do generational wealth created for your family by buying your home now, pass it on to the next generation, or they get the equity, they get the house, but they get something. They don't get a pile of rent receipts, because that is not wealth.
It is. Go ahead, Debbie.
Sorry, the gap in family wealth between homeowners and renters is just skyrocketing. It's not going to get any better because rents are getting so high. And if your rent is high, it's almost impossible to save or invest. If you're a homeowner, you're automatically investing every single month when you pay your mortgage.
You are. It's really important. I do a lot of work with financial advisors, and over the last 50 years, real estate and ownership of your primary residence has outperformed every other investment vehicle, whether it's gold, whether it's Bitcoin, whether it's the stock market. The reality is you have to pay to live somewhere. Return on rent is always zero. So when you're paying to live somewhere, you want to pay yourself, as Debbie shared. Every time you make a mortgage payment, you're building your net worth. Working with financial advisors, statistically, 67% of the average American family's net worth is their primary real estate. So the first step, not your 401k, not Bitcoin, not gold, not the stock market, is home ownership, because you have to pay to live somewhere. Now, in 30 plus years, the two biggest challenges to home ownership have been the same. It's challenge credit and no savings or cash to close. I started in this business in the 80s. Those are the same two challenges that we're seeing in 2023. The reality is there are solutions for that. So especially the credit and the cash to close part of it, there are solutions. You just have to work with the right partner. So Nick, what do I do if I have a low credit score?
Well, if you have a low credit score, we have to figure out why you have a low credit score. And another thing is there's no such thing as bad credit. You know, the credit scores are a snapshot in time. Most people don't understand how credit works. And most people that have challenge credit, you can improve that credit. You know, there is a process to it. You know, it can take someone 10, 11 years to make their credit scores perfect, 700, 800s, and it could take 1 month for that to come down. So credit can be repaired. We do actually have resources. And actually, I like to say hi to Rachel, who's on the call right now, who is one of our partners that does help with credit.
Hey, welcome, Rachel. Absolutely. You know, banks are really good at tricking us to do things that negatively impact our credit score. And you know, they don't teach us that in college or high school. So we learn that on our own. And sometimes we make decisions that don't necessarily help our credit score, because Best Buy told me I needed to get a credit card to reduce my bill by 10%. I said, oh yeah, sure, I'll do that. So Nick, what about scores?
Okay, scores are different. The lenders use different credit scoring models to gauge risk, which means what we pull as a mortgage company and what's acceptable to acceptable credit variation for mortgage is going to be different than if you go pull your credit for a car loan or a credit card. There's different versions. There's 7, 8, 9 different versions to every credit score. TransUnion, Equifax, Experian, they all have different versions, and they're all scored differently based on risk to what you're trying to get credit for. As far as Credit Karma goes, everybody has gone on Credit Karma at one time or another and has pulled their Credit Karma score. Credit Karma, it's not a true definition of what your credit score is. It's not something that a credit card company, a car loan, or a mortgage company can use in order to qualify you. Some of those Credit Karma scores can actually differ from what we pull. It could be 70, 80, 90 points higher. It can even be lower. So if you think you have a low credit score with Credit Karma, you're discouraged with that, let's not look at that. Let's actually look at the scoring model that's going to help you qualify, and let's work on improving that if you need improving.
Absolutely. Credit Karma is just a looky look. So Nick, let's talk a little bit about what drives the score. You'd be surprised.
Okay, so there are different things that actually do drive a credit score. The biggest thing, of course, is payment history. If you pay your bills on time, then that is going to be a major impact on your credit. Now, another place is the amount you owe. For instance, a lot of people think, oh, I pay my bills on time every single month. I pay my credit cards on time. I pay at least the minimum payments. Why are my scores low? One of the big reasons is how much balance you keep compared to your credit limit. You really want to keep those, the balance you owe on your cards under 50%. When you're getting over that 50%, or you're getting to that credit limit that you have, that is going to negatively impact your scores. New credit, also can impact your scores. If you go get a credit card right away, or go get a new car, you go to the car dealer, that could impact your scores one way or another in the short term. Length of credit history is important. The longer you have credit, the longer you have those trade lines, the more it can be scored. So if you have a credit, if you actually have a credit card where you've had it for 10 years and you're finally going to pay it off, keep that account open. Do not close that account, because as soon as that account closes, so does that credit line, and they stop reporting.
So Debbie, when you have credit, do we make it work?
Oh, we can make it work. We have so many success stories, it's unbelievable. We have success stories of people that went from bankruptcy to homeownership, foreclosure to homeownership. But today I have an interesting one that deals with insurance. We had a client, Katrina. She came to, she was a buyer, and she was denied a loan 3 weeks before her settlement date. First, they had approved her, and then all of a sudden they didn't approve her. So Nick came in, he was the second lender in with his Superman cape, and he went through all of her documents all over again, reviewed everything. She was very complicated, but he needed to lower her payment. So he called Jessica, the insurance agent that's with us today. She was able to review Katrina's insurance policies and make some bundling corrections and suggestions that saved her $40 a month. It was that tiny little bit, $40 a month, that saved this deal, and Katrina was able to settle. And Nick and Jessica got all that done in 14 days. The previous lender had them for 3 months, and they got it done in 14 days.
Wow.
Yes, Deb, and just to reiterate on that, when I got the file, it took a minute to figure out what mistakes the other lender made. So
Yes.
once we figured out what the mistakes were, then we tried to figure out, how can we overcome these mistakes? And once we did that, and once we were at our limit, Jess stepped in and actually really beat the previous insurance offer that the client had, and that little bit made the difference. That's how tight this deal was. We're at the absolute threshold to get that deal done.
Yeah, I think it's important to realize that the process and the journey is a bunch of folks working together to make it happen, whether it's insurance, realtor, lender, and the process is details and accuracy, Nick.
Yes, and this is where a lot of problems occur during the loan process. The details and the accuracy matter. We want to make sure that we're verifying your income, that we know exactly what your employment history is, and we want to make sure that you can respond to us quickly when we have a question. The biggest thing is if we have an issue ahead of time before, and we can overcome those objections ahead of time, and then there's no what's the word I'm looking for? There's no blindsiding the underwriter. There's no issues running around to try to get things done at the last minute when you're ready to close. Accuracy matters. If somebody tells you, oh, don't worry, I don't need that document, I can get an exception, run away from them. Okay, because everybody's got pretty much the same underwriting guidelines to follow. Instead of getting an exception, let's get the correct documentation and figure out a way to overcome the issue. Am I right, Brett?
Absolutely, right. The rules and the guidelines are pretty hard and fast. You just have to have a professional help you through the process. So Nick, there are several types of loans and some are the primary tools for first-time home buyers.
Yes, now FHA is probably the most popular loan. It's a loan insured by and guaranteed by the Federal Housing Administration. Um, Private banks, credit unions issue loans, and the FHA actually provides the backing or the insurance. So if you don't pay the loan, the FHA will pay the lender instead. Because of that guarantee, lenders are willing to make substantial mortgage loans in cases where they'd otherwise be unwilling to approve loan applicants, which means FHA, okay, will you can get approved with a little bit lower credit scores than you can a normal conventional loan. It also offers lower down payment, flexible credit, and what we mean by qualifying ratios is, let's say, for instance, you make $1,000 a month and the mortgage payment is $470 a month. That is your front end ratio. That would be 47. And if your total debts, including your mortgage, are $570 a month, then that would be 57. And you know how the scale goes up. When you're looking at conventional loans, your conventional loans are capped out at the front end of it being around 42%, and the back end being around 45. So it does give you more flexible. You can actually borrow more money usually with FHA, and FHA is just not for first-time home buyers or people with challenged credit. You see a lot of clients going into FHA to have more flexibility. Now, also the loan limits have increased for FHA. In the Washington area, you're around a little over 970,000. Baltimore's around 647. And Brett, I think that went up a little bit this year as well.
Yeah, it did. It just got
2023.
announced. We're up there. The MSA of Washington's over 1 million and
Wow.
it's over 700,000.
Yeah, so you honestly can be a first-time home buyer and possibly qualify for $1 million property.
Oops, sorry.
Now-
What's really important too about FHA, and we talk about other people's money, FHA is the most flexible with most available grants, and we can stack those grants with FHA loans, which means you can use multiple grant programs. And folks, understand, these are not low-income programs. These are programs designed to help first-time home buyers enter into the housing market. So they provide a lot of flexibility. And since we can stack these grants, you can buy a home for little or zero down payment in some cases. So it's very exciting to do that. And then there are some other programs that allow us to have 100% financing as well.
Absolutely. And two of those are the USDA and the VA, veterans loans. Now, when you're looking at a United States Department of Agriculture loan, a lot of people think, oh my goodness, I don't want cows. I don't want a farm. I don't want corn. I do not want to buy a house where I'm going to have to go get a big old plow. That's really not the case with USDA. Every county has certain pockets that are USDA eligible. Now, it's very, very possible to even get a townhouse in some of these areas. USDA has eligibility and income requirements. There are limits depending on how many people are in the household. And one thing with USDA is you might, let's say if you might be qualifying for the loan on your own, but they will count everybody's in the household income to that USDA threshold. I know that might be a little bit confusing to understand right now. I can go over that with you, but USDA is a very, very good tool for many people in order to get into a home with little to no money. And of course, if you're a veteran, our vets can get into a house with zero down,
Yep. So when we look at that, I mean, how much down payment is really required to buy a home? You'd be surprised that the number to the far left is zero, right? You can actually buy a house today, and you don't have. It's not limited to veterans. It's not limited to USDA. We do have programs that will provide 100% financing. When we stack them with grants, that can cover your closing costs as well. So we look at how do other people's money work, right? When you're looking at a real estate transaction, a lot of people can participate in creating the down payment and helping with your closing costs. The buyer, the seller, the lender, the realtor, or family member. When we look at the options that are out there, and this is where you have to work with a team to help you from the realtor standpoint, the lender standpoint, the insurance standpoint, how do we help you find the dollars to help you become a homeowner. They don't need to be just yours. We have state and local housing financing agencies, whether it's Maryland Mortgage Program or different city programs or different county programs. You'd be surprised what money's available to help you become a homeowner. Employers, we do have employer assisted programs where an employer can help you with the down payment or closing costs, and there are nonprofits that are available as well. When you look at this, right, you have to work with professionals to help Debbie, as Debbie said, help you find those buckets of money that are available to you. You'd be very surprised that you can actually buy a home today with no money down and money back with the unique program that we put together for you. So let me repeat that. 0 down payment, and what do you get, Debbie?
You get cash back after
You
the
get
sale.
cash back. Absolutely, after the sale. So one of the programs that we have is what we call the FHA 100. And these numbers are going to go up as well, as Nick just shared with you, just because they raised the FHA limits and the average area median incomes have increased for 23 as well. So basically 4 questions. Do you have fair credit? You don't need good credit. You just need fair credit. Do you have a stable employment? Do you want to buy a home today? And for 2022, there's numbers 168, 160 in the Baltimore area and 206,000 in the DC area. If you earn under these, you can qualify for this program. Those 2 numbers actually are going up as the AM area median incomes are increased for 2023. So how does it work? In today's market, right, we're looking at this in the Baltimore area, there are thousands of listings under 350 that you would qualify for in this program. Now, this also would in the DC area as well. Just to give me an example of how it works. In today's market, the average rent is $2,500. You could buy a $350,000 house today, inclusive of insurance and taxes and insurance, and still have a payment after tax benefit that's lower than what you're paying in rent. In a just mortgage to rent comparison, you can actually buy today for cheaper than you're paying in rent. So the question that you're looking at is, can I buy a home today for equal to or less than paying in rent? Debbie had said this earlier, rent inflation is actually moving faster than mortgage payment inflation. That's going to continue. The other thing you have with rent, I had a client today, we were helping them to get approved. They thought they had time. Their lease is up in February. The owner of the property, their landlord said, yeah, we're going to sell it. So we're not going to extend you month to month. You're out in February. Like, oh, okay, they're problems. So we're looking to qualify them to buy that property. So renting isn't always the option. When you look at today's marketplace, you can actually buy today with little or no down payment for less than you're paying in rent. So Nick, how does that process work? Because it's not as hard as people think. You're muted, Nick.
Yep. Yeah. I just took myself off mute. Yes. The process is not hard if everybody's working together. You know, you want to work with an experienced lender. You want to work with an experienced realtor. You know, everybody's different. Everybody's situation is different. So everybody's going to have a different plan to be a homeowner. So we want to make sure we get that plan started and we execute that plan together. You know, you want to get a pre-approval first. You do not want to go out and look at homes. Many times, you know, a seller's agent, or if you like a house that you see on Redfin or something like that, a lot of times they won't even let you look at a house unless you're pre-approved. So let's make sure that you are pre-approved before you go out and look. You got to be committed to the process. Like I said, I can't do this by myself. Debbie can't do this. Brett can't do this by himself. We have to work together. Details matter. We have to be accurate with the information. With the age of the internet that we have now, nothing can be hidden. If there's something, you know, if there's child support that's not showing up anywhere, you know, on the credit report or on your pay stub, let me know about things like that. We can overcome them together because they will be eventually found out. And it's better for us to find them out and before the underwriter does, so we can have a plan and we can have a solution for some things. You will need to supply documentation throughout the process. We're going to ask for initial documents from you. After we get those initial docs, 99.99% of the times, we're going to have questions regarding those docs. And as we go through the process, we're going to ask for updated docs. So be prepared for that. You know, once you when you're doing your loan application, try to have as much documentation ready as you can. And that is just, pay stubs, W-2s, the last 2 months of bank statements. If you're a self-employed employee, you're going to want to have the last 2 years of tax returns, bank statements, things like that. Just try to have everything or gather that information ahead of time if possible. And we're here and we're available when you need us. Personally, I've had clients that have called me 3 o'clock in the morning. I've answered the phone. I've had clients and first responders that have needed me 11 o'clock at night. I'm personally always available if you need me for anything.
But Debbie, so the question a lot of the folks that joined us tonight are asking,
When is the best time to buy a home? The best time to buy is as soon as you can afford it. Start accumulating that generational wealth. Start building that wealth for your family. Also, winter is a very good time to buy a house because sellers are anxious in the winter and you won't have that much competition in the winter. So
I think it's important, Debbie, you're right. When you look at it, as soon as you can afford it, and what we've helped you understand is many of you can afford it today, right? The question
Yes.
is, can you buy a home today for equal to or to what you're paying rent or less, or with what you're comfortable for, then your time to buy is now, especially if you can do it with little or no cash. The other part that Debbie had shared with you is that property values have normalized, which means there's value buys out there. Sellers now are rethinking their process. They're a little anxious, right? They want to sell the property, so they're making concessions. They're helping with closing cost help, which is something you couldn't get over the last 2 years, and interest rates are trending in the right direction. So all of those factors are working for you. So as soon as you comfortably can't afford it, this is the right time to do that, because we don't know when those trends that are in our favor will move in the opposite direction. So with that, a lot of people that joined us, right, they're not quite ready yet. So what we've done is developed a new solution to help you. And I know we had a question regarding I-10, and I'll talk about it in just a second. Here's a new way to own a home in 2023, where we've created a phenomenal rent-to-own program that allows folks that are not quite mortgage ready to ease into home ownership and solve some of the problems to home ownership. If you're renting today and you don't think you have the ability to do it, whether it's credit, or I don't have my social security number, or I just changed jobs, we've got solutions for you. So who qualifies these? Who qualifies for these types of opportunities? When you're looking at folks that were pushed out of the marketplace, this is a way to bring them back into the marketplace. So folks that are attending the call tonight, if you're a first-time home buyer, if you're recently self-employed, a new phenomenon that we've seen that's really popped up during COVID, if you're a 1099 or a gig worker, you move to an independent contractor, we're seeing this in the tech space, Uber drivers, DoorDash drivers, right? This now is a new form of employment and a new economy that's taking over, but a lot of the lending programs haven't followed that, so you have a challenge with that. Relocation, you just moved into this area, you went to a new job, you have a student loan burden. FHA rules, Fannie Freddie rules are a little tighter on student loans. We have an ability to work through that. College graduates, this is a tremendous program for I-10 borrowers that do not have a social security number or are DACA. We do this with a 3.5% down payment for I-10 borrowers. Nick can help you through that process. If you have credit issues, we can do this program down to a credit score to 580 to help you work. So how does it work? We'll do a 580 credit score. We'll work with folks that have non-seasoned W-2 income. Most FHA, Fannie, Freddie require a 2-year history. We don't need that in this program. Same thing with self-employed. If you're recently self-employed, you don't need a 2-year history. Deferred student loans. FHA will not take a deferred student loan. We will. So a lot of buyers that have come into the market that have just graduated, they have a heavy student loan payment, they don't qualify. We'll look at a payment in deferral and not count that against you, which will give you the power to buy. Cash to close. This will be much more flexible in solutions, whether it's grant programs or gifts, no seasoning requirements, so we can help you with this liquidity issue. As I shared with you, I-10 borrowers, no credit score is okay. We'll do this with as little as a 3.5% down payment for I-10 borrowers, which is unheard of in this marketplace. If you've had a recent credit event, bankruptcy, we work with you one day after it's been discharged, foreclosure, one day after it's been completed. We have much more flexible underwriting rules in this program. This is a unique program that we've created with Debbie and Nick to help you in the marketplace. So the reason I bring this up is you may have an option. If you're sitting there thinking you can't buy, these are solutions we have for folks that have been pushed out of the housing market over the last 2 years. We can bring them back into the marketplace and give you an opportunity. So what's important, folks, we talked about the opportunities that are out there, but it doesn't work unless all of these pieces are put together. And one of the most important pieces that not only goes to protect your asset, but is also a big part of getting you approved is the homeownership insurance that you need. And Jessica, you can speak about how that works.
Yeah, absolutely. Thank you. Just as Nick had mentioned, having an experienced insurance realtor, an experienced realtor and lender, you also need an experienced insurance agent. Too many times I've seen where the coverage was not where it should be, which can throw everything off. And of course, insurance is a key element to your closing. So you need somebody that is familiar with the different companies. And we have here at my agency, we have several carriers that we use, and they all have basically, their key audience. Some of them shy away from rural areas, just depending on how far you are to a to a firehouse, or if you have a pool, some of them just favor and give better rates for different scenarios. And saving money on your insurance by bundling, that is key too. Lots of people have their insurances separated. And of course, we know that the insurance companies, they will reward you for having them together. And so you could save tons of money that way. So just having somebody that can go over and, make sure that you have proper endorsements, or review everything with you, make sure that you're not over insuring or worse, under insuring the house, just to get you ready for closing.
It's got to be Goldilocks, Jessica. You can't be overinsured or underinsured. It's got to be just right? We
That's
have to
right.
go with Goldilocks of insurance strategy.
Absolutely.
And it's really important, folks, that you understand all of these things going together. The insurance part is part of your pre-approval. We have to make sure that the payment works and get you at a payment level that you're comfortable and that you can afford when you're looking for your new property. All of these things working together make the journey easier and helps you reach your goal of home ownership much quicker. And there's a lot of opportunity out there today. So I know we're just a couple minutes over, Debbie, so why don't you let everybody know how to reach you?
Yes, give us a call. And Nick's information is on one of the other slides. And what we'll do is together with you, we'll create your path to home ownership, because we always say motivation and time equals home ownership. And let's start building your generational wealth today.
And with that, folks, once again, a reminder, if you're renting today, it's possible for you to buy a home with no down payment, closing cost help, and cash back. And it's a great time to buy. So thank you for joining us tonight. We appreciate it. It's the first step to help you build your financial future. Reach out to Debbie and her team. We're there to help you at any time. It's a great time to buy. Take advantage of the next 100, 120 days, because that's going to be a great window of opportunity for everybody. Happy New Year. Thank you for joining us, and reach out to us for any questions. Thank you very much.